Hello and welcome to my channel, The Day Tradester, the channel where you get to see the trades that I make on every single day. So if you decide to copy my trades, you'll be a little bit more profitable. If you're a returning visitor, thanks for returning. And if this is your first time here, hopefully you'll come back because you see the benefits of the trades. So today was a red day. S&P 500 went down today, largely due to one stock. Sorry about that. ASML, Advanced Semiconductor Materials Lithography, they had their earnings this morning and they lowered their projected sales revenue for the rest of the year, which is what created the red day. Before we get into the video, if you could please like, subscribe, and share the video, and also hit the bell to get notified. That'll help my channel with the YouTube algorithm so I get in front of more faces. If this is your first time to the channel, the first thing I do when I work the strategy is sell. I sell all the stocks that have triggered my indicators so we can add as much money to our cash balance so we'll be able to purchase as many stocks as possible that were triggered. As I said, the markets are mainly red today. We have 25 stocks on our list to sell. I don't mind selling, that's where we make our money, but I would rather the bull market continue up a bit, thereby increasing our profits when we do sell. But all the profits we make today, they are welcome. The reason ASML is important and what caused the markets to go red is that they are the only company in the world that manufactures the machines that actually create and build the microchips. They don't make the microchips, they build the machines that make the microchips. Without ASML, we'd have no AMD, we'd have no NVIDIA. IBM wouldn't be able to do what they do. Even though it's a red day, I don't expect tomorrow or the next few days to be red, because even though their revenues are affected because they're not allowed to sell machines to China, NVIDIA, AMD, MU, ARM, IBM, they'll still be able to make their chips. So these stocks going down, the market going down largely because the mainly NVIDIA is going down. It's mainly in sympathy with ASML. I'm expecting a bounce back tomorrow. But at any rate, we've got profits. All right, so it's been about a week and a half. I've been talking about the benefits of putting in $25 a week if you're a new investor or if you're thinking about investing. My videos aren't necessarily just for people who are new or the beginning trader. These trades will benefit anybody. If you're an experienced trader, you certainly would be helped by making some of these trades. But the majority of people who are looking at YouTube, they are either thinking about trading or they're new and they're trying to figure things out, which is why I'm making my videos. So the conversation has been geared towards those who are thinking about getting in and the benefits of becoming a trader. I will try to make a video specifically to this particular subject, but for today, I think I'll just try to pick up where I left off with my thoughts about fractional shares. I guess I should do a quick recap if for the anybody who's watching my video for the first time. So the conversation I've tried to have, or the dialogue I've tried to have over the last week and a half, is geared, as I said, towards people who might be jumping in or thinking about becoming a trader. That you shouldn't be afraid, or you shouldn't think that you can't become a trader, or you can't invest in stocks because you think you might not have enough money. If that's not true. If you're able to put in $25 a week, which I believe, if for anybody who actually has a full-time job, even at minimum wage, I think you'd be able to find $25 of money that might not be used the most productive on a weekly basis. So $25 should be fairly easily to afford. And if you can't do 25, you could do less. You don't need any money to actually open up an account with Charles Schwab. And it doesn't cost anything to actually make trades. You could buy stocks at no cost, but to sell stock cost or to sell shares costs 1 penny. It doesn't matter if you sell 1 share or 1,000 shares. That counts as 1 trade, and then only costs 1 cent. So whether you do $25 or $10 or $5, benefit of getting in now in 2024 is that there is a low barrier to entry. You don't need a lot of money because trading is basically free, where 10 years ago it would cost $6.99 for each trade. Probably not even that long. We have the benefits of the internet, and right here where I use Thinkorswim and Charles Schwab, where before you'd have to call up your banker or your broker and tell them what trade you'd like to make. So not only would you pay $6.99 to make the trade to the broker, you'd have to pay the actual agent or the bank, and who facilitated the trade. So not having a lot of money is not a barrier. You also have access to fractional shares. Instead of buying a $700 stock or $1,000 stock, you can buy $5 of that particular equity. So no matter how much you're able to put in on a weekly basis, if you're able to, you quickly can diversify your portfolio. Since you'd be a beginning trader, you want to try to make as much money and lose as little money as possible. So you actually force yourself to diversify. Meaning instead of having all of your money in one particular equity or one company, by using fractional shares, you can immediately start purchasing shares or equities of multiple companies. Again, the minimum that you could purchase is $5 through Schwab Slices. Other brokerages allow you to buy a minimum of $1 of a particular stock. Another benefit, if you follow me, is we are sort of implementing dollar cost averaging, meaning that whatever amount you decide to put in, you're going to be putting in every week or every other week or once a month. But by doing that, we may be putting our money into the markets when it's on the high end of a move, meaning that we might be buying into a stock that's actually priced fairly high. Or at some point, we might be buying in when the stock has fallen and we're actually buying at a very low price. So over time, as we continue to buy stocks and we put that money to use on a weekly or biweekly or monthly basis, the overall price in which we purchase that stock averages out and smooths out over a period of time. So I've got one more stock after we purchase UDOW, which is XLE, which is an energy ETF. It's an ETF for the energy sector. And given AI and the energy needs that AI will be using over the next couple of years, that sector is probably going to do magnificently well. So if you are getting into the market, you are getting in at the right time. So I'm just checking to see if Netflix sold. We purchased that and it didn't sell when we actually purchased it. So it'll probably sell, or at least I hope it does, by the time we finish all of our buys. And I've got 17 stocks we'll be buying. I believe I'm definitely going to have enough money to purchase all of the stocks that were triggered for purchases. So again, if you are a beginning trader and you're thinking about getting in, the other benefit of fractional shares is that you can buy stocks that are high performing stocks. You can buy stock like Chipotle Mexican Grill. You can buy NVIDIA. You can buy MicroStrategy. Chipotle is like a $50 stock. MicroStrategy is like $190. They probably went down today, but it doesn't matter the value or the cost of the share price. If you're able to put a little bit of money in every week, then you can utilize the fractional shares through again Schwab Slices, and you'll have a portion of any equity that's in the S&P 500. Another benefit of starting small it forces you to learn at a different rate, because by having a little bit of money, you are trying to keep as much money active as possible. You want to make as little losses as possible, because the plan is to grow wealth as opposed to just putting money into a 401k and letting it grow over time, over years and years and years. We want to capture daily moves. So by watching my videos and continuing to do research on YouTube, you might learn how to trade stocks faster than somebody who's got thousands and thousands of dollars or tens of thousands of dollars. It's a lot easier to try different strategies. Like this particular strategy I use, I have 135 stocks, and every day I go in to see which stocks were triggered for sales or which were triggered for purchases. My strategy works, so that will help you learn faster. Your learning curve will be much smaller than mine was if you choose to make the same trades as I make, or if you just use it as a research tool to supplement your own strategy that you might be trying to create. Another benefit that happens over time is that your confidence will grow probably a little bit faster because we're trying to mitigate our losses. We're working with low amounts, low dollars, low balances. So when we do lose a little bit of money, it is only a little bit. So your confidence will probably grow far quicker than other people who are trying to do this entirely on their own. It certainly will help with long-term financial planning, in that we're trying to stretch, or you're trying to stretch the whatever amount you have that you're putting in, whatever week by week or monthly basis. So that's going to help you make different choices when it comes to purchasing stocks. And since we're buying and selling every day, you're going to enjoy the flexibility of being able to make trades as opposed to just putting your money into a 401k. And there's absolutely nothing wrong with 401ks that get you into the market. This is trading every day increases your portfolio balance faster and more steady than a 401k. So the two things that were possible barriers, or are possible barriers, in preventing you from getting into the market is the amount of money that you might be putting in, and the possibility of not being able to purchase stock. Well, that is taken care of with the revolutionary or the technology, the new technology of fractional shares. Fractional shares are definitely going to be your friend. If you don't have a lot of money to put in, we're definitely going to be using fractional shares to build a portfolio. They are easily accessible by anybody from any brokerage house. By using fractional shares, you'll be less likely to throw something through a window or break something that's on your desk, or to run out of the room screaming and hollering, because when you lose, you're only losing a few dollars. You're not losing thousands of dollars. So fractional shares are certainly a good way to help keep you emotionally stable and able to trade throughout the day. So if you are thinking about jumping in, you've got a little bit of money, you've got fractional shares, and you've got my videos. I post these every day. And every day I make a little bit of money, and so can you. So with your money that you're putting in to be able to purchase fractional shares by using my sell and buy lists, you will be able to achieve the things that I just spoke about. That was supposed to be a recap, but I'm getting better. So this is our sell list. This is everything that I bought for the day. This is the buy list. The sell list was sell. This is our buy list for the day. I post these every day, so you don't actually have to watch the video and write down any specific stock that you might be seeing. You can come to the my buy and sell list. I also provide my triggered lists. This list is all the stocks that were triggered to be sold. I either chose not to sell, or I didn't have any equities in that to sell. And I show the triggered list so you can make a choice. You can copy some of the trades I make. You can copy all the trades that I make by using fractional shares at some point, or you can just use it to teach yourself. Now, we were able to buy every stock that was triggered on our purchase side. And if you watch me, it doesn't matter if we have red days. That's when we make our money. We make our money when we sell. Doesn't matter if it's a red day or a green day or one stock is going down or all the stocks are going down. When the market's red, it really doesn't affect us as negatively as it does most people with their 401s. And we make money on the red days and we make money on the green days. Because we're swing trading, there'll be days when the market's going up, but some of our stocks are going down. So we sell those as they start their downward move. Because if you're trading, this is what it's about. And I've got the images of ones because the conversation I've been having for about a week and a half for those of you who are thinking about trading or are new to trading and you're not having much luck, then by following me, we're growing our portfolio no matter how small of amount we're starting with. I'm not an expert. You might not be an expert. If you're new, you're definitely not an expert yet, but we all gotta be making money. So please subscribe and definitely share this video. And if you have any comments, feel free to reach out. I'll try to answer them as best I can. So have an awesome evening and thank you. And hopefully I will have you all back tomorrow so we all can make more money. Thank you.